All right, guys. Well, let's go ahead and get started. Let's jump into today's or this week's outlook. Hope you guys all had a great weekend, and I hope you guys are ready to make some money this week. Just want to set some expectations for those of you that are watching this right now that I'm going to go over a majority of these pairs that you see over to the right side over here. The pairs that you see marked with red, I'm going to spend a little bit more time on. Those are the ones that I'm kind of have my eyes on a little bit more. The one that is in purple, this is because this is a pair that I have a position on right now, which I'm going to share with you guys. And other than that, we will jump into things. If you have any questions throughout this, if you're watching this live, you can throw them in the chat. And at the very least, if you can do me a favor and smash that like button before the end of this video if you enjoy the value that is here. But let's go ahead and jump into things, guys. It is a very busy week in terms of news and fundamental drivers. So we're going to go over a couple of them right now. So in about 8.5 hours from right now, so if you are not watching it live, it's going to be a different time for you if you're watching the recording. So just make sure you always check the economic calendar and that you have the economic calendar set to the right time zone. I will share with you guys one neat thing that Forex Factory recently did. So if you can see where my cursor is in the top right and you click on the little time, you can actually pick, okay, if it's not the right time, there'll be a little hyperlink here that says match automatically or something along the lines of that, and then you don't have to do any work. You just click on that, and then as long as you don't like log out or you don't clear your cookies or history or anything like that, it'll stay like this. It'll stay at your time zone, so you always know that it's at the right time, okay? But a couple things to go over. Coming up early Monday morning, so in a couple hours from now, we have some GDP. We have a whole slew of GDP coming out for the pound. We have not just GDP, we have manufacturing production month-over-month report. Two different types of GDP. We have preliminary GDP, we have just standard GDP. And this is all gross domestic product, so this is all going to be a very strong growth indicator for the pound, and so this definitely expect pairs like pairs that I'm interested in trading, like pound dollar, pound yen, things like that. If you trade any other pound crosses, expect those to move. Tuesday, we have an interest rate decision coming out for the New Zealand dollar. So the Reserve Bank of New Zealand is going to be deciding their interest rate decision, which is most likely going to be kept the same at 1.75%. Along with that, there's going to be a monetary policy statement and a rate statement. So look for the commentary, look for kind of like the cliff notes that's going to be released, or you can just read through the rate statement. But for those of you guys that are not familiar or maybe need some help knowing what websites are good. I mean, there's so many good websites out there that cover the news. One of my favorites is forexlive.com. I know there's some other bigger ones out there too, like Daily Effects and things like that, but I think Forex Live is probably my favorite one, so you should definitely give them a check. You should check them out if you're ever wanting to keep up about the fundamentals. Wednesday, there's some more news for the pound coming out. So it's going to be at the same time Wednesday that the news on Monday is coming out for GDP, but this time it's going to be CPI. So for those of you guys that don't know what CPI is, that's basically inflation, okay? That's Consumer Price Index, and that's the inflationary measure. The goal with CPI, or you want CPI to be around 2%, okay? Now, seeing that it's going to, and this is actually this is probably one of the most important news that's coming out for the pound this week. I'd say that this year-over-year CPI is much more important and is going to move the markets a lot more over the GDP that's going to be coming out on Monday morning. So just definitely keep an eye on this. What I recommend doing, guys, as far as keeping track of these things, obviously, keeping this. If you're like me, well, for these outlooks, I just open up a new window and I just put Trading View on one tab and Forex the calendar on another tab. But most of the time, like right when we get done here, I put all my tabs together, and I usually have like anywhere from like 10 to 20 tabs open on my browser at one time. So I always have Trading View open, and I always have the calendar open. So that's one way. But what I recommend doing is going to like an office supply store and just picking up, or you can even get it at Walmart, and just picking up one of those desk calendars. That's what I use. They make them in all different sizes, so you can have a little tiny one or a big one, and you can keep it just like with some push pins up on your wall, and you can write down the most important news and write what time they're coming out at. Or you can, if you aren't a big fan of like writing, I personally like to write things down, okay? I have like 4 different whiteboards. I literally am super religious about post-it notes. I have all sorts of little post-it notes next to me, all sorts of pieces of paper and notepads and all sorts of stuff to write stuff down on. But if you like to put things in your phone, well, you can put down all these important things. In my eyes, I like to just like have it on a calendar that I'm looking at like constantly so I don't forget about it. But get the picture. I'm just the point that I'm trying to make, guys, is just make sure, be aware of these things. Keep yourself on top of these things. One big tip that I can give you from being a professional trader is treat trading like a business. Don't just treat it like a hobby or joking around, or just like not putting a lot of importance on things. So I guess just kind of tying things back into Wednesday, this CPI is going to be a very big factor for smart money, okay? For big money that moves the markets of deciding if they're going to sell the pound or if they're going to be putting money into the pound. It is showing that there is supposed to be a little bit of a decline. So we can see that the previous reading was 2.1%, so just a little bit above the target of 2%. And this reading is going to be 1.9%. And keep in mind, I can't say this enough, that this is just a forecast, okay? Just because it's forecast to be 1.9%, which can be perceived as, slower growth or a slowing in growth for for Great Britain's economy, doesn't necessarily mean the number that's going to come out. This could come out at 2%, and then that's not necessarily amazing. That's not necessarily bad. It would be a little bit worse than the 2.1%, so that might cause a little bit of selling, but overall that 2% is right around where they want to be at. So yeah, just keep in mind that this is year over year. Okay, this is something very big that's going to be coming out for the pound on Wednesday. So that's one of the main things. There's also going to be some CPI for the dollar on Wednesday as well, for the US dollar. Now, it's not a year over year report. It's a month over month report, but that doesn't mean that it's not important. It still is inflation is the leading factor of how smart money makes their decision. Okay, inflation is a very key thing that smart money watches, right? Institutional traders, commercial traders look at to take positions in the market. So just make sure, like, if you don't understand CPI, go watch some YouTube videos about it. Go learn about CPI, okay? CPI, Consumer Price Index. It's very, very important. Just like GDP is important all the time. Like it's almost every single week we're seeing some sort of economic indicator, whether it's CPI, GDP, PPI, which is PPI, PMI, Purchasing Managers Index, an interest rate decision, something that affects some currency. So it's a good idea that if you plan on taking Forex seriously, that you understand what these different economic events are, okay? So those are a couple things. On Thursday, we have some PPI and some core retail sales coming out for the dollar, something else to keep your eyes on. And then Friday, just some month-over-month retail sales for the pound, okay? And that's just covering the high-impact news, right? I'm not talking about there's even medium impact. There's some CPI coming out for the Chinese yuan, which okay, this is also big too. I know that this is not a red folder, and that's because in my opinion, I don't think it's red because the Chinese yuan isn't a pair that can be traded, right? We've talked about, or as if you're a student in the group on our daily webinars, we've talked about the Chinese yuan before and talked about that it is a fixed currency, not a floating currency, meaning that the exchange rate doesn't change. The Chinese yuan stays constant, and that's because China is a net exporter, okay? They're actually the largest net exporter in the entire world. So that's also the reason why they have a fixed currency. But there's a year-over-year CPI coming out for the Chinese yuan Thursday night. So that is going to affect pairs like the Australia or currencies like the Australian dollar, the New Zealand dollar. Um, but yeah, mostly those two currencies. If you don't understand why, I've explained it to my students many times before. So, and if you are not a student, hopefully that encourages you to be a student or at least find a mentor that talks about these things that you might not have any clue about. Okay, so let's go ahead and talk about the dollar index very quickly. Also, guys, if you have any questions while we're going through this, like I said in the beginning, leave some messages or leave some questions in the chat room, or even if you're watching the recording, leave it in the comment section. I love replying to messages and making sure that you guys have your questions answered, and making sure that the knowledge is seriously power when it comes to trading. So there's no real stupid question. If you have a question, ask it. Okay, but we're going to go through pretty much all these pairs on the right-hand side very quickly. I'm not going to spend too much time on the pairs that aren't unmarked, but I do just want to talk about a couple things. So dollar index. First and foremost, where is the dollar index at? Well, I want to look at the weekly chart. So last week, the dollar index rose, right? And that's because EuroUSD fell, right? So we're going to look at EuroUSD in just a moment, and had a pretty big sell-off last week, and so that created the dollar index to have a rally. We can actually see on the daily chart there was a whole 5-day rally on the dollar index. It just had a 5-day or a whole week of gains. There wasn't a single day last week that closed lower than where it began, right? So that's why we see 5 big blue candles from last week. Now, just kind of a key level, let me mark it off, is the resistance that we're at right now, okay? So this is kind of like the make it or break it point for the dollar index. If we break this resistance, then which we're currently trading at around the 62.50 level, exactly, we're trading at I don't know why I said, wow, why did I just say 62.50? I'm looking at one thing, saying another thing. We're right around the 96.50 level. Exactly at 96.62. If we break this level, we can most likely, and this is the daily chart by the way, we can most likely expect the dollar index to continue its rally up to the last year's highs, which is around 97.50. Okay, so around that zone. So this is definitely kind of an interesting week for the dollar index. Now, if we do see this resistance hold, which would be support on EuroUSD, which we're going to look at just a moment. Remember, EuroUSD and the dollar index do the exact opposite of each other. That's because there's about a 57% weight of the euro inside of the dollar index, right? With a total of 6 currencies that make up the weight on the dollar index. But if we do see this resistance hold, which would be that support on EuroUSD, which we'll look at in just a moment, then we're probably just going to stay in this range that we've been in for the past couple weeks. But we did find a pretty significant bottom back on end of January, early February, right around the 65 level, where also previously was the yearly lows back in January 9th, January 10th, where we rejected. Okay, so just kind of an interesting spot for the dollar index, something to keep in mind on, and I don't really have a bias on the dollar index or the euro USD this week. That's why I don't have them marked off, but just some key levels to watch. Gold also, I'm not going to really make any predictions, at least any short-term predictions on gold, but if you guys have been following up, if you've been subscribed and you've been following with these weekly outlooks for any amount of time now, you've known that really since we were even below 1250, around 1200, I've been bullish on gold. Matter of fact, we took a buy on gold all the way down here around 1183 back in October. Okay, so I've been bullish on gold for a while, and I've said this before, and I'll say this again. My long-term outlook on gold is that it's going to have no, and it keeps getting there, right? I mean, last time I said that gold was going to go back up to the multi-year highs around 1365, or I've been saying that, but it might have seemed like a stretch to some of you when I was saying that when gold was down around just barely above 1200, and now we're above 1300, right? Just in the past couple months, since November-ish, we've gained $100 per troy ounce on gold, which is a pretty strong, I mean, it's not too crazy. Gold tends to be pretty volatile. We do see some pretty crazy waves at times to both valuation and devaluation of gold, but right now it's pretty positive for gold, and I think a lot of that has to do with, I mean, there's so many economic factors right now, but a lot of it has to do with the Eurozone not doing well, a lot of uncertainty with the pound, a lot of uncertainty with China, a lot of uncertainty with the dollar. There's so many factors that I think are just pushing buying pressure onto a metal like gold. And I've said this before, and I'll say this again, that I think this year gold, emerging markets, commodities like oil and things like that are going to do very well. Okay. So that's just my opinion, okay? And I think, like I said, a long-term target, I'll keep that long-term target, like let it be known on record for probably like the dozenth time now, is that gold I don't think is going to have any problem this year reaching 1400, 1500 levels, maybe even higher, 1600, 1700, but definitely getting back up to, first step, baby, you have to crawl before you can walk, right? Baby steps first. So we need to be able to get back up to the multi-year highs, which is still about $50 off from where price is at now. We're gonna have to break the 1350 level, which if you guys trade based off of quarters theory, if you have an understanding of that, you'll know why I have the every $50 marked off on my chart, okay? But that is gold, okay? Euro USD, so this is the weekly chart on Euro USD. If I just kind of take off all of the markings, we can pretty clearly see that Euro USD is bearish right now. I actually have not touched Euro USD for a couple weeks now. In fact, last week I only took one trade, and that's on dollar yen, which I'm still in, and I'll give you guys kind of a little bit of a brief overview of what I'm in on dollar yen right now, and also some just disclaimers with that. Oh, speaking of disclaimers, I can't believe I forgot that in the very beginning, and I didn't even do a proper introduction. My name is David Schinkel. Obviously, if you're watching this far, you probably know that. But I'm the CEO and founder of Positive Traders, and I do this weekly outlook every single Sunday for you guys. And I can't even remember the last Sunday that I didn't do one. I'm really proud of myself. That's actually been one of my personal goals. I think it's really good to set personal goals, but one of those for myself has been to just make sure I stay consistent with these. I know sometimes I'll miss one here or there, but I literally haven't missed one in, I'd say a couple quarters now. At least 6 months I haven't missed a single one of these. So, and I don't plan on missing one anytime soon, no matter where I am. So, but my disclaimer is that, just keep in mind that this information on here is just for educational, informational purposes only. Okay, guys, this is my bias, my opinion of the market. Please, I'm sure it's hard to say that not to let this influence your trading, but please don't let this influence your trading. Don't rely on this for investment or financial advice. This is just supposed to be a crutch, right? This is just to kind of give you an idea of what I see in the market, what one person sees. I believe I have the qualifications. I do a lot in the Forex market. I trade a multiple six-figure account for myself, as well as manage a lot of money through different various ways. So I think I hold the qualification. Not only that, but it's not just talk. You got anybody that wants to, you can also go and see my MyFX book that is in the description as well for you. So, and I just a fair warning, I'm not in the Forex game, and I don't think anybody should be in the Forex game for like short, fast gains. I do not believe in the whole flipping account mentality. I do not believe in the whole, there's people online all over Instagram. I see literally ads all the time. People are claiming to make, we'll catch 3,000 pips this week in the market with us. Like, I promise, the grass is not greener on the other side. The grass is greener where you water it. That's something I tell my students all the time, okay? So wherever you put the most time and dedication to, that's where you're gonna get the most results. But, just trying to find a group that you can flip your account with and, turn $1,000 to $100,000 in 3 months and solve all your worldly problems, it's most likely not gonna happen, okay? You need to treat it as a long-term gain. So me personally, I like to aim for about 40% returns per year. And when you look at that in relationship to something where I could have my money in like a mutual fund or a 401k, an IRA, having it in a fund that trades the S&P 500 or the Dow Jones or something similar, that probably does about a quarter of 40%. That's why I trade Forex in a nutshell. Okay, I'm not in it for the 1,000% gain in 2 weeks type thing. I'm in it for 40% gain in a year. What is that? 400% gain in 10 years type thing. So that's kind of the name of my game. All right. But anyways, back to Euro USD with the weekly chart on this pair. We can see last week, just like the opposite of the dollar index, so there was a strong rally on the dollar index that was obviously caused because of a sell-off on the euro, Euro USD specifically. And we are at a significant level. So you can see when I have all my markings up, if I drop this onto the daily, we can see that the 113 level is a very significant level. And not just because of now, but we can see that it's created a major demand for this pair at this level over the past couple of months. So I'm not going to go over every single date, but you can very clearly see it with this bottom lower blue box of where price or how prices reacted off the 1300 level before, with the exception of what I call a spring, or not just what I call, what a lot of traders would call it, a spring back in November, where price actually broke the lows and then quickly reversed and moved back up. And what we call that, a spring, a bear trap, whatever you want to call it, stop hunt, whatever you want to call it. With the exception of that move, we can see the 113 level has pretty much been like a line in the sand for EuroUSD. And my bias, just like the dollar index, stands that if this level is broken, then most likely what I would be looking at is this trend line. And those of you guys that know about me and trend lines, you know that I do not really rely on trend lines on the lower time frames. Really, anytime you see a trend line on my chart, it's going to be on the higher time frame. It's going to be like on the daily or the weekly or maybe even the monthly sometimes. You'll actually even see, so even if I scroll out right now, I have a total of 4 different red lines, and they're all based on either the weekly or the daily, okay? So 3 of them you can see are from the weekly, and then this one above price right now is just from the daily, okay? But anyways, this weekly support trend line would probably be the next target for EuroUSD to head towards. So that's if we mark kind of where it would go, and if potentially go this week, that would be like 111.30. Let's just round up for just to be conservative and say 111.50, and right now we're at 113.26. So that's about 170, basically 200 pips if we want to call it, 200 pips lower than current price. So this is a very key level to watch in my opinion, 113. Okay, we're gonna have to find out, do we bounce off of this level or do we continue selling off, right? Obviously, if you're just taking one candlestick and just doing one candlestick analysis on this pair, it looks like we're going to see a sell-off more than anything on EuroUSD, right? There's not a ton of reason to be buying EuroUSD, but at the same time, in my opinion, just because there's that bearish engulfing candle on the weekly, there's also, we have to recognize, or I have to recognize, this very strong level of support on the daily. So I think there's conviction to both sides right now, whether you're a buyer or a seller in the market for EuroUSD, and that is why I'm not interested in trading EuroUSD, okay? USD Swiss Frank, kind of interesting. I don't know how many of you guys saw this. USD Swiss Frank made about a 100 pips spike up, like right when the markets opened. Very interesting move. And to be honest, I have not gone and looked into the news or why this happened yet. I'm sure there's probably an explanation if you start searching online for, but yeah, it's creating, I mean, at least as far as this daily candle is concerned, it's creating a very strong wick right now. Obviously, there's still like over 20 hours left until this daily candle is closed, so anything can happen. This doesn't necessarily mean that this is how this daily candle is going to close as a big exhaustion candle. So I'm just kind of going to skip over this pair right now, but just one thing to kind of understand with USD Swiss Franc in particular in comparison to other pairs, you'll see that I have this very long, when I zoom out, I have this very long blue box that goes all the way back to 2008. And if you look a little bit deeper, if you just kind of like look logically at where this box is at, it's at parity, okay? If you don't know what parity is, you probably shouldn't be trading real money, all right? You should probably go and educate yourself on some things like that. But parity in just parity, what parity is when one currency is the same exchange rate as another currency, so 1 to 1. So USD Swiss Franc right now is trading at 0.9995 and then pipettes to the third, right? So it's basically 5 pips away, or not basically, it's less than 5 pips away from being at parity. I think that's another reason why the markets are so volatile around this level. Could it be a stop hunt? Possibly. USD Swiss Franc, from my track record, has proven not to be one of my best pairs to trade. So although it does have a fairly strong negative correlation to EuroUSD, I'm not too interested in trading USD Swiss Franc, but just something I want you guys to recognize, right? Just a big big rejection off of parity once again, and it's very similar to EuroUSD, right? I think if we see EuroUSD rally this week, which I'm not saying it will, but if we do see EuroUSD rally this week, then we'll probably see a sell-off on USD Swiss Frank and vice versa, okay? Pound dollar, I'm also going to skip over. I'm not too interested in pound dollar right now. I would definitely like to see how the GDP comes out tomorrow, and then the CPI comes out Wednesday for the pound. But one pair, so let's start getting into some pairs that I do maybe have some interest in trading that are marked off. So first thing is pound yen. Pound yen is at a pretty significant level in my opinion. I know I've got a lot of markings on here, a lot of different things, but what I just kind of want to look at right now is this 141 level. Even a little bit closer if you want to take a look and you just want to mark off, this is the 4-hour chart. Kind of the support where we're at right now. Also, just kind of be aware of where the pivot points are. So this longer set of lines, horizontal lines, is going to be my weekly pivot points, and then the smaller ones are going to be my daily pivot points. And we can see prices trading below not just the daily pivot point, but not just the weekly pivot point, but also the daily pivot point. So I'd say price action on pound yen, and then this is the weekly chart too. Price action on pound yen is fairly bearish right now. But for me to even look at a sell on pound yen, I'm going to need it to get below this lower green box level, which is going to be around just a little bit above 141, like the 141.30 area. Okay, that's where I'm going to need price to get below for me to be a seller. As of right now, this could definitely just be a correction for price to continue moving higher. Okay. So dollar yen, let me just give you guys a very big disclaimer before, and I see that there is a lot of chat going on. Maybe I'll jump to the chat in just a second before I finish this off because I see a lot of you guys are chatting. Now, before I say anything with dollar yen, please do not just jump into your MetaTrader 4 and take a trade just because I tell you the position that I'm in on dollar yen right now, okay? Because I want to give you a disclaimer that if you don't know me by now, you will find out that every single trade that I place, I trade with either 1% or 2% risk. Now, I know some of you guys probably think that's crazy because you're used to not using a stop loss and over leveraging your account and losing, blowing your account on every other trade. And I say that not even very sarcastically because I know it's true. I know it happens. I know everybody's looking to get rich overnight. Everybody's looking for that trade that's going to solve all their problems. So nobody uses a stop loss. Nobody understands risk management. Not nobody, but a good majority, guys, okay? And I'm not trying to sound pessimistic, but unfortunately, that there's just this stigma on social media with Forex trading that, Forex trading is going to solve all your problems in 3 months, and you're going to quit your job in 6 months, and you're going to be a millionaire in the next 12 months, and that's just simply not the way it works. So please, half of me wants to not even tell you guys what position I'm in with dollar yen, but another half of me likes to be really transparent and let you guys kind of know where I'm at with things. So I'm not going to tell you all of my exact parameters or overlay the buy or sell thing like I do for my students, but the buy or sell template like I do for my students. But I am currently short on dollar yen. I have my stop loss a little bit above this alert. So I actually have an alert above the yearly highs, which is around 110.16, and my stop loss is a little bit above that. I have a 1 to 4 risk to reward, or almost a 1 to 5 risk to reward. It's like a 4.96 risk to reward on this trade. So that doesn't, those of you guys that understand what that means, you'll know around where my take profit is too. But let me just say this in short, okay? I am using a 1% risk on this trade. I've been holding this trade this short since Tuesday, okay? So if we go onto the chart here, oops, I don't know what that, I don't know what that is. Okay, I took this short on Tuesday, and literally since Tuesday, price has done nothing but consolidate. And this is the reason why I'm saying, please, just because you hear that I'm short on dollar yen, do not rush and jump onto your MetaTrader 4 and over leverage a short position on dollar yen, because I want to say this, is that the consolidations, you can actually see where I entered last Tuesday on the 5th on a break of this bear flag, and as price started to descend, actually it was a little bit before that. And literally price is within, I'll just say this, it's within a couple pips of where I entered at right now. So it's done nothing but consolidate, and unfortunately this consolidation has now turned into what most of you guys can visually see here, which is a bull flag. And I'm not a big fan of that. Okay, I'll just be straight up with that. I'm not a big fan of this bull flag. It leads me to believe that price could run higher, and that's the whole gist of what I'm trying to say. Is that I believe that dollar yen there is still some conviction to the upside, and I'll tell you guys right now that I believe that if my stop loss gets hit, which like I said is a couple pips above where I have this alert set at 110.16, I believe that dollar yen will have no problem running up to this next level of previous support, which would be resistance once we get up to it, which is like 111.60, 111.70. So that's another 150 pips up higher. So that's why I say don't go and just over leverage a short on dollar yen right now, because it definitely has the potential to move up like another 200 pips from where we are right now. But I will tell you this much, that even if I get stopped out with that, first off, I'm okay with that because it's a 1% risk, okay? If you've looked at my MyFX book, I finished off last month with about 3%, and then December was 6%. So I am still playing with a premium right now, which is very good for, in my opinion. But my long-term bias on dollar yen is still short. I think that dollar yen, especially euro yen, which we're going to look at in just a moment, which I think has a little bit better opportunity, and it's also supportive of and conducive of my yen strength bias that I have. But I guess in short, what I'm trying to say is, if anything, the reason why dollar yen would continue higher wouldn't be because of yen weakness. If anything, I think the yen is going to get stronger over the coming weeks, coming months. It would be because of dollar strength, right? USD strength, and that's pretty much bound to bring this pair higher. But yeah, that's dollar yen in my opinion. Okay, so that's kind of my analysis, my bias. You can see my long-term outlook. I think dollar yen is probably going to fall towards 105 eventually. But you know, at this point, it really has a lot to do with what happens with the U.S. dollar. Okay, and so as much as I want to love this trade to keep taking shorts on it, I'm not very interested in it. I'm just going to stay committed to that trade I'm in, and that's that. Okay. Now, dollar yen on the other hand, euro yen on the other hand, and also very quickly, let me just take a look at the chat really quickly. Sounds perfect. People doing podcasts and webinars with the Blue Yeti microphone. So I actually used to have, that's the microphone that I used to have, a Blue Yeti microphone, and then from traveling and getting thrown around in my luggage and my carry-on all the time, I think it probably broke. So I might pick up another one. It was actually a pretty good mic when I used it. I think you guys liked it. Niraj Patel says, how much do you charge for the course? It is $299. Kevin says dollar index coming to a weekly supply zone. Exactly. So that's that resistance that we talked about. I stand tall. Love it. Had a long-term bias on gold as well. Crazy demand zone down there. Awesome. EuroUSD buy. That's okay. Madi is calling a EuroUSD buy. Nice to hear your thoughts. We'll have to definitely see what happens this week. 40% yearly is not 400% in 10 years. Oh yeah, no, of course. Yeah, no, I know. You have to take into account each, like, it's growing, it's compounding every single year. I was just throwing like a general number out there. I definitely understand that. Okay. Guru's back on. Absolutely. Good to see all you guys. Okay, so let's get on to euro yen. So euro yen, if we just kind of take off all the markers, well, because there was a sell-off on the euro that we talked about back on when we were looking at euro USD, there is obviously that sell-off on euro yen because of the euro weakening, right? That sell-off of the euro. So it created a pretty big bearish engulfing candle on euro yen. If you were on last week's outlook, I told you guys that I've been interested in taking a short on euro yen, at least long term. And we're starting to get to the bottom of this channel. Okay, this channel, obviously, I'm just using, I don't even know exactly what TradingView calls it. Equidistant channel, I think. Oh no, a regression trend. So this is just general, guys. This orange flag or channel, whatever you want to call it, is just here to show you the general pattern or price action of what it's doing. But hopefully all of you guys can see that it's just been kind of consolidating sideways for a couple of weeks now since the beginning of the year. And I am bearish on euro yen. So not only am I bearish on the euro overall, but I'm also bullish on the Japanese yen. Um, so I think that there's a lot of argument for euro yen to find some downside long term. This week could be the week we see it. If you're one of my students on the daily webinar last week, I told you guys that I would really start to kind of ramp up and look for short positions on a break of this previous higher low that was created. We ended up you can actually see right now that higher low is being created, or higher low is being broken. So we're getting there. For just a little bit more confirmation, what I would like to see is another 50 pip drop on euro yen and kind of see this next level around 123.75 broken. And really, if we get through that area, which you can also see on the daily is pretty significant level of support for a couple weeks in January, then we're pretty clear on the downside for a couple hundred pips at least. Okay. So euro yen I think is a great setup to look at. Also, if you just want to take a look at basic trend lines and things like that, again, this is another example of, you see I have a trend line, but this trend line is only off the weekly. We can see that the series of higher lows that were being made was actually broken. We're seeing the retest of this previous support area. So pretty strong selling pressure on euro yen, right? And I mean, it really hasn't, with the exception of right here, I mean, a couple times last year, back in August, back in June a little bit for a couple weeks, back in April for a couple of weeks, where the downtrend that started at the beginning of 2018, when we had a couple corrections, we've primarily been in a pretty strong downtrend, a pretty aggressive downtrend with this pair. So I forecast that to continue happen as we see. And again, this is all predictive, all just my own bias, as I believe we will see the Eurozone become to, or that's not even the right word, become to, what does that mean? No, become or start to collapse. I think we're going to even see a further aggressive selling pressure on euro yen, okay? And if you don't know why I'm biased on the Eurozone collapsing, well, I'm not going to go over it on today's webinar. I've gone over it on previous webinars, but yeah, long story short, let's just say that when you give dozens of countries the same monetary policy, but all of those countries are able to control their own fiscal policy, so they all have different fiscal policy, but they all have the same monetary policy. It's like kind of what happened in the US back in 2007, when you give people that have bad credit, you say that they have good credit just to be able to say that you were able to give them a lot of money so that the bank's books look good, right? So it says that the banks are so strong and people's credit are good when their credit isn't actually good, right? It's like there's countries that don't have good credit, basically, if you want to talk in terms of credit, that are being perceived as having good credit, and they have shit credit, okay? So that's kind of in short, but it goes a lot deeper than that, all right? I mean, it doesn't go too much deeper than that. That is the gist of it, but yeah, you guys get what I'm saying. All right. AUD USD, NZD USD, I actually am not interested in either of these pairs, okay? I'm just going to skip over two of these pairs. I know I said I was going to go over most of these, and I have, but some of these I'm not interested in, okay? Oil, okay? So oil is in a pretty interesting spot. I am still bullish on oil, okay? And we're going to talk, these two go hand in hand, right? USD CAD and oil, okay? Both of these go hand in hand, all right? I am long-term bullish on oil. However, last week, and especially the way the weekly candle closed for oil, isn't looking too good for oil on the short term, okay? Really strong bearish engulfing candle on the weekly on oil. Pretty strong sell-off last week on oil. Now, do I think it's going to last? I don't think so. I believe that we're going to see a strong demand for oil. We haven't heard a lot from OPEC recently, so I mean, as more news comes out in as far as fundamental drivers in relationship to oil, we probably should see some more direction on oil. But yeah, we're just not seeing some great moves on oil right now. And so I have some key levels on oil marked off. I think this week it's possible that oil could move back down, maybe lose about $1 on per barrel, and we could go back down to like the 50.50 area, which is this lower green zone. And That in turn would cause a little bit of buying pressure on USD CAD. That probably move that would, I mean not probably, that would move USD CAD back up to 133.50. Now, some of you guys that have been following along, you might be saying, "Well, wait a second, David, you've been bearish on oil for a while now." And I mean bearish on USD CAD for a while now. And some of you guys may remember, right? I called this is actually a trade that we took if you were one of my students, but we took a sell on oil literally at the top of the correction a couple of weeks ago. Caught a nice move to the downside. My targets were lower. I mean, we're long out of this trade by now. We've been out of this trade for a while now. But yeah, if anything, this is the way I put it. I think that the higher USD CAD goes, the better short it's going to be, the better price we're getting to take a short. So in my opinion, let USD CAD keep going higher. That is totally okay with me because I know that that is just going to increase my risk to reward with shorts, right? It's going to lower my risk and increase my reward with shorts on USD CAD. So yeah, this is just my opinion on USD CAD. So I do recognize, right, just similarly to the inverse, how US oil has that strong bearish engulfing candle on the weekly on oil, USD CAD has this strong bullish engulfing candle, right? So there's definitely some argument for buyers to step into the market. So I mean, if you're into that intraday scalping type thing, there may be some opportunities this week to buy USD CAD. However, you know, me being a primarily moving a lot of, I've done all types of trading over the past years, guys. For those of you guys that don't know, I'm sure all of you guys probably know by now, because if you're here, you're probably committed to being here every week. But if you don't know, I've been in the market for going on 6 years now. Okay, so it's crazy to believe that I'm going to be 26 in July. I got in the markets when I was 20. Actually learned about them when I was when I was 19. Got into them when I was 20. I'm not saying I was some superstar professional trader right off the bat, right? I went through my first year, did terrible time trading, just as most people do. Lost a lot of money in the market, or you know what was a lot of money to me in the market in when I first started my first year. It took another year to get to a point of at least just some basic consistency. And then it's just been, if you want to say in terms of technicals, it's been higher highs as each year has gone by. Okay, so I've been around the block. I've tried all types of trading. Some of you guys might even be here from when I first started Positive Traders 3 years ago, and I did a lot of intraday trading and scalping, and that was like primarily, you know, how I made my money. Bread and butter was scalping and trading, you know, taking 10 trades a day type thing. I've been there, done that, got the t-shirt, guys. But in my opinion, it's not really for me long term. Okay, you can obviously, I would still be doing that if it was for me long term. Okay, you will find yourself getting burnt out. In my opinion, you'll find yourself getting burnt out on scalping over time, right? You know, it's fun to scalp the markets, and I'm not gonna lie. There's times when I will scalp the markets or take an intraday trade, but is it the majority of my bread and butter and how I make money? No, I prefer, you know, a couple solid quality trades every month. You know, 5 to 10 high quality trades per month, letting those ride, using good risk management as always, and using good risk to reward as always, and letting those trades do their thing. Okay, that's in my opinion, the best way to be consistent. Have your emotions out of the mix and just be consistent. That's all you need. You know, you don't need to make 10, 15, 20, 1,000% in a month to make a living, right? And you don't need to do that, okay? There's ways that you can make a living off of just a couple percentage, okay? And I've gone over those with you guys. If you don't know, watch some of my previous weekly outlooks. I go over prop trading, managing accounts, all that type of thing, all those different ways that you can leverage your skill. That's what it's about with trading, right? If you don't have $1,000, I mean, if you don't have $100,000, $50,000 to start trading with when you become consistent and profitable, well, then you need to be able to leverage your skill, right? Leverage your network, leverage what you can do with trading. All right. So anyways, with USD CAD, that's my long-term bias. I'm still long-term short on USD CAD, and in short, I'll just say the higher USD CAD goes, the better short opportunity it's going to be. Okay. NZD CAD, I'm just going to kind of skip over for now, but it's just kind of in a range that we're in. AUD CAD, this is something I actually meant to go over this last week, but this is something that I wanted to go over with you guys just very quickly. So back in, and this is why I wanted to go over it last week, because it was the week prior to last week, so 2 weeks ago, that I first looked at AUD CAD, okay? So in the group, we took a short on AUD CAD. We ended up getting stopped out. This ended up being not stopped out, but a break-even trade. Okay, so I kind of said that a little too fast. We got stopped out at break-even, so we didn't make anything. We didn't lose anything, but this was an idea. Now, unfortunately, with the way I broadcast now, some of you guys may remember the Zoom days, and Zoom lets you use a marker to draw on the screen. I cannot draw on the screen with OBS. So if you're just gonna kind of have to follow my cursor with this, or just kind of like mentally visualize this, but basically, in short, I'm going off of a repeating pattern that was on AUD CAD, and you can see where my cursor is to the left-hand side of the screen. Just in short, we saw a little bit of a rally, a dip, a rally, a dip, a rally, and beginning of a dip, right? That creates a little bit of an ascending head and shoulders that you can see right there. And then we broke that neckline of the head and shoulders, fell a little bit of a sell-off on this pair, and then some consolidation. And post-consolidation, we can see that there was a big sell-off on AUD CAD, okay? Very similarly, okay, the current price action is the price action of the past couple months is very reminiscent of what happened in the past, right? We see a strong rally, we see a bit of a pullback, rally, pullback, rally, pullback, right? We see that head and shoulders pattern that gets created. We see that neckline break, a little bit of a sell-off, and then that current consolidation, right? So these two patterns are very reminiscent of each other. And so back on January 29th, me and my students, we actually taken a short on this pair. Granted, we can see now that if we would have held it, it would have ended up turning out really nice. So you can see we almost got stopped out one time, still got within, or still was clear. We were still about 5-10 pips or so away from my stop loss, and then ended up falling. So my analysis on AUD, I just want to show you guys that to, A, give you a little bit of credibility, B, just give you some backstory that this isn't just some random pair. I've been following this for a while now. But AUD CAD, I would be long-term bearish, at least for, let's see, how many months is this? From October, or we could actually say, let's say like July of 2018 to like September, July, August, September, October. So about the next 3 or 4 months, the next quarter or so, I'd be bearish on AUD CAD. Okay, so that is AUD CAD. Again, that's a long-term trade. I know that's not like a weekly setup. Euro CAD, GBP CAD, not too interested in AUD NZD. AUD NZD, I'll just say this in short, it is downtrending very strongly, and it has been for a while now, since the middle of last year. And there's just this major demand level for AUD NZD right now. Okay, there's this major demand level, major support level for this pair. I am not interested in trading this pair until it breaks. But if and when it breaks, kind of similar to like what happened back here. You guys notice from about August 2018 to October 2018. So what is it? August, September, October, 2 whole months basically. AUD CAD just sat on this support level. And what are we seeing happen now? From December to February, about 2 months, it's been sitting on this support level. So, if I can give any tip in as far as price action goes and just add some sort of value into your trading very quickly, I would say this is watch patterns on the specific, like, individual pairs. Okay, so I'm not saying like necessarily compare one pair to another pair, or just like general patterns of like bull flags, bear flags, head and shoulders, things like that. I'm talking about structure, right? Just like how we talked about with AUD CAD, how there is this, the current price action structure is very reminiscent of previous structure. And even that, right? Even this trade right here is like a perfect example where money could have been made by just simply looking at previous price action and looking at current price action, how history tends to repeat itself. Well, we're seeing a very similar situation happen right now, where we're seeing like a 2-month level of support being held, and that was obviously broken in the past, where we might see that same thing happen. And if we do, maybe we'll get a little bit of a break, and then that little bit of a complex retest, and then it descends for a couple of months, right? Almost 2 months again where it descended. So, or a month and a half where it descended. So look for AUD NZD to follow this very similar setup, okay? Now, let me say this. I know a lot of these things that I've talked about on today's is like kind of maybe giving you any opportunities for this week. Maybe a USD CAD does give you some pairs this week. But you know, I'm not here to hold everybody's hand, right? I'm not here to necessarily give out a free trade here and there and do everything, right? I've been there, done that. If you don't believe me, go through my Telegram. If you aren't in my Telegram, the link is in the description, and you can literally scroll through that Telegram that is in the description, or that all of you guys are probably a part of. You can scroll back and you can go all the way to the beginning of the middle of 2016 when I first started that Telegram, right? And you can see how my trading has progressed. You can see that there was definitely a time and a place when I used to just give out free trades left and right and say buy here, sell here, here's your stop loss, here's your take profit, guys. But what I've found is that does not create, first, that doesn't really add value. I mean, you could say it adds value because it makes you money, but it doesn't teach you anything, okay? I think doing this type of setting, this type of environment where I explain things, show my past results on certain trade ideas is, so much more beneficial to you becoming your own trader and not having to rely on anybody else. And that's really the goal of where I want to go with things. And I believe I am going with those things, is becoming a real mentor to you guys, not just like somebody that holds your hand and gives out everything. Okay. And last little tip that I will say is, for those of you guys that do not keep track of your trades, first off, just stop being lazy. Okay, stop being freaking lazy. All right, like, you are not going to be successful in anything in life, whether it's trading. It doesn't matter what you want to do in life. If you are lazy, if you aren't willing to go full force all in with something, you aren't going to be successful. Straight up. All right, I'll tell you right now. I'm not going to sugarcoat anything. All right. Second off, this is just a tip for you, that if you, again, you shouldn't be lazy, but if for whatever reason you're too lazy to get a trading journal and write down your trades and follow your progress, well, at least leverage technology, okay? All of you guys can press buttons, right? Because you all spend hours a day on Facebook or Instagram or doing whatever, right? So you spend time doing that, you can spend time doing this. You can press publish right here, and you can actually see right here, you can publish in the bottom right-hand corner. You can either publish a public idea or a private idea. So what I do is I publish private ideas. This is something that I've started using this year because I found it a lot easier, and it's really just, it's obviously nice because you can see everything on here. You can put in if you're going long, short, neutral, is it analysis, education? Most likely it's going to be analysis, and you're going to be taking a long or a short. And you can write down your idea, and then boom, you can click the lock button, so you don't have to worry about being embarrassed and being wrong or anything like that. And then you can, boom, publish that idea privately. You can see it on your TradingView profile, and you can go and see. And just to show you guys, ideas published, right? So I'm going to show you guys. These are all the trades. You can see that these are all the trades that I've taken this year. I think I've put almost every single trade on here, but boom, you can, I guess I'm giving you guys a lot of information, right? I said I wouldn't show the dollar yen short, but here's the short I'm on dollar yen. You can see little locks by all of these right now. See, lock here, lock here, lock here, lock here, and I have lock here, lock here. I have all these locked trade ideas that I've taken this year. Because I think I might have missed a trade here or there. But I try to make sure, right? Every single trade that I place, I try to make sure that I put some information in there. That way I can go back to it, look at my history, look what works, look at what doesn't work. Obviously, I already do that with writing things down, but for me personally, I already write so many things down and have so many things on my whiteboard, so many things on all my notepads. It's easier for me to keep track of this long term, okay? So just a little tip for you guys, all right? And that's free. I don't even think you need a subscription to do private ideas, all right? Just want to throw some value out there, okay? Naranj says $2.99 a month. No, $2.99 one time. No. That would be ridiculous, right? I definitely would not be making money trading if I charged $2.99 a month, right? No way. If somebody tries to charge you something crazy like that, $200, $300 a month to like be a part of some trading group that they're in, no, it's like they don't make money from trading, right? They make money from people staying subscribed to something like that. That's crazy, okay? And then any last things in here, Madi says will go up soon. I'm assuming you're talking about oil, or maybe I don't know what you are talking about actually. Oil will go down short term. I believe that too. I definitely can see oil going down some short term as well, okay? So guys, that is this week's weekly outlook. I appreciate you guys. Sorry it took a little bit long. Oh, I guess we've only been on here for 1 hour, so this is actually perfect timing. So I will conclude it at the top of this hour. I appreciate you guys, and if you have any questions, feel free to reach out to me on social media. Do me a huge favor. If you have reached this part of the video, please smash that like button, okay? I'm assuming if you're here, you've spent an hour of your time watching me blab. It's probably because you saw something that was valuable. So please, guys, All I ask is that if you found this valuable, share this with somebody, but also please smash that like button. It helps the YouTube algorithm get this information out to other people that would find this valuable as well. But other than that, guys, thank you guys for your time. Have a great week trading. Remember to use good risk management, good risk reward on all your trades. Students, I'll see you guys on tomorrow's first daily webinar of the week. Everybody else, I'll see you on next week's Weekly Outlook. Take care, guys.